Hello, and welcome to another episode of the LendAPI, a partner podcast. Today, my guest is Mo Milo, who is the CEO of Relli. Welcome to the podcast, Mo.
Thanks for having me, Rutgers.
Now, we'll start off with the same question that we ask everyone, which is how did your business get started?
It has been quite the journey. We started about 3 years ago. I'm now on my fourth startup with my current business partner. And it came about obviously because of three failed previous business startups. So you have to go on to number four. That's how that works, right? But what we ended up learning was that me and my co-founder really could rely on each other, and finding loyal co-founders is very hard. So in this most recent startup, we decided to take on the world together and just say, you know what, it's me and you. Let's try to figure it out. Let's see what we can do. And the impetus for the business came from our personal interest in finance and investing. And with the results that we created through the stock market, through cryptocurrencies and other vehicles of investment, we wanted to expand our portfolio, and we wanted to do in real estate, but we didn't have the opportunity to do it passively. I personally had experienced my parents as landlords with their small portfolio of real estate that has generated amazing cash flows and wealth for them, but they've also had the absolute terror of dealing with tenants. And I wanted nothing to do with that. Neither did my business partner, Ross Relli. So we decided that we wanted to invest passively, but discovered that there were really no great options for average consumers that were non-accredited, non-high net worth, non-institutional investors. So we essentially decided to create the platform that we wanted to invest on.
Yeah, that's very interesting. So you saw it firsthand with your parents, what one scenario was, and you're like, we're not going to do that. Let's find a way to get the benefits from investing in real estate, but not have the sleepless nights and managing tenants and all that comes with actually being a landlord.
That's exactly right. And moreover, what we really wanted was an experience where we could diversify our interest into really high quality investments and not just be focused on the single family home flip. We wanted a piece of the retail assets that the rent is paid because Walmart always pays the rent, right? We wanted a piece of that. We wanted some self storage. We wanted some debt. We wanted some different things that we didn't have access to as landlords or owner operators at a small level. So we decided to build a market where we could create that diversity. In this iteration that we currently have, it's focused towards accredited investors, and slowly but surely we're expanding towards the public markets. So it's very exciting.
Okay. So passive investment. So that's the use case you solve for. But tell us a little bit about how that works for accredited investors and maybe how that's going to work in the future for the general public.
Yeah, so real estate as a whole normally works in the same way, no matter what type of asset you're buying and no matter what price the asset's at. There's an equity component, there's a debt component, and then you deal with operating the asset. And currently, the way that the market works is people will raise capital for the equity component such that they can put the money down to go acquire the debt, and then they'll operate the asset and distribute income to the investors that helped put up the equity. And that market has been behind closed doors for decades. It's, I know this guy and he connected me with this deal, so I give them $100,000. It's either you knew the guy, you had a bunch of money, you had a really great financial advisor with connections, but the deals have existed forever. They just haven't been available to the public. So what we did was we created a platform where real estate sponsors across the country can advertise very easily their real estate investment vehicles to those accredited investors that may be looking for those passive investments. So today it's very simple. We offer a completely free marketplace to the passive investor where they can check out real estate deals in all different asset classes across the country, passively deploy their capital 10, 25, 100, 200, $500,000 at a time, and they can earn that cash flow as well as the equity growth from those amazing assets. In the future, what we are intending to create is a true stock market experience. So just like how when you log on to your Fidelity E-Trade Charles Schwab account, you have the ability to choose between the hundreds, if not thousands, of listed offerings and invest in a fractional way. in
Mhm.
shares of the
Yep.
business. We want to create the same type of marketplace for the average consumer with the same high quality real estate investments that are currently being invested into by those institutions and high net worth individuals. And the way that we go about doing that is by integrating technology and new compliance regulations that have come out in the last 20 years or so that allow the real estate developers to expand their community to non-accredited average investors, average consumers that want to invest 100, 1,000, $10,000 at a time. And we're seeing some of the real estate developers already participating in these strategies. You might have heard of a guy named Grant Cardone. He's very popular on social media. He has a huge following. And what he has done incredibly well is built an audience that resonates with his brand and given them opportunities to invest alongside him in his real estate assets. What we're attempting to create is a platform where any real estate developer that's of a high quality, not just those that have millions of followers on Facebook, Instagram, and TikTok, can plug into a platform like ours and offer our audience of retail investors those same types of opportunities while improving the economics of their deal. So that's the future. In between where we are today and where we need to go, there's a lot of education and a learning curve. There's a lot of real estate development firms that are very antiquated or traditional in the way that they do business. So getting them to integrate technologies they've never used, manage compliance they've never dealt with, deal with investors that they've never dealt with in this format is a bit of a so what we believe is that if we do a great job meeting our customer where they're at today, which is those real estate developers, and provide them a value with what they need right now, which is access to new accredited investors, which, just to define that for the audience and for you as well, an accredited investor is simply somebody that makes over $200,000 a year or has over $1 million in assets, which, although seems like a lot, that $200,000 figure per year, that's a rather large group of people that exist in the marketplace. And I'd say maybe 5% of those people know that these offerings exist and are actively deploying into them. So we have a lot of opportunity to help those people. And with that solution where we can help our customers where they're at by giving them this marketplace and helping them connect with more investors that now are educated on investing in these types of assets, we can build trust with those real estate development firms and show them a path to the public offerings that can improve not only the bottom line by improving more profit in the pockets of the investors, but also the efficiency of the business through technology, branding, marketing, etc.
So you bring the two parties together and make it seamless for them so they don't have to worry about all the operational parts. They just put up the money, and on the other side, the developers will provide the projects that they can invest in. That sounds very interesting and very valuable. Now, tell me, what's your favorite customer story?
This is great. So this is actually a story that's rather recent. We're an early stage company. We launched our platform about 3 months ago,
Mhm.
and we recently had an investor that deployed $100,000 into one of the real estate investment opportunities on our platform. And he's an LA-based CEO who is not active in his investments. He has a great CPA, he has a great financial advisor, and he relies on them heavily to get him the right deals and put him in front of
Yep.
the right investments, just like any smart business owner should. And he came to us looking for an alternative to another deal that he had previously invested in that was a multifamily real estate investment where he also invested $100,000 and was receiving an 8% return on his investment. So he came to me, presented the deal that he was investing in, and said, More, I know that you have all these deals on the platform. What do you think you can do to help me get a better experience? So immediately I was able to show him a few different deals on the platform that had different structures that could make him more money. But at the end of the day, what we ended up falling back into was the fact that he loved the experience of essentially being the bank and having a consistent cash flow come in every single month. And his goal was to get a higher cash flow position. So we actually ended up connecting him with a deal on our platform hosted by a group called GLH Capital, where instead of that 8% preferred return, he would start at a 10% preferred return. And every year that he kept the capital in the real estate fund, he would earn an additional percentage point until he caps out at 15%. Sounds like a pretty good deal. What makes it even sweeter is that if he doesn't like the deal after 12 months, he can get out of it. So that specific deal provided him a couple really great things. Number one, it beat his price, right? He currently had a certain amount of money coming back. We were able to get him more money. Great. Number two, it was a longer term deal. So the holding period, very, very short, which was much better than the other deal because it was a multifamily deal that he was locked into. He could be more flexible and liquid in this deal. But beyond that, if he was loyal and stuck around and had the option to be loyal and stick around, he would continue to earn more money as he generated more opportunity with this company. So I think we did a few things for him. We gave him a more liquid offering, we gave him a more lucrative offering, and we gave him access to different deals so he could choose.
Now that definitely sounds like you were meeting the customer's needs and then some. So a great customer experience there. This is probably a great point to wrap up our conversation today. Thank you very much, Mo, for being on the podcast today.
Rutger, thanks for the time.
And until another episode.